Something very interesting is taking place in the energy world. We're probably all familiar with the Rockefeller Brothers Fund. This is an organization that was set up by the Rockefellers, founded on the 1940s oil giant Standard Oil. And this fund goes out and invests in things in order to generate money for philanthropy. Now, the organization just recently announced in one of its statements that it's going to divest from fossil fuels into clean energy. The main targets are oil, natural gas, and tar sands. Meaning this group of about 180 companies is going to start taking about $50 billion out of fossil fuels and put it into clean energy. And this has got a lot of people's attention. Now, this is exactly what it says according to its statement. In working to align our endowment investments with our mission and programs, we will adhere to the long-standing mandate of our Board of Trustees that our assets be invested with the goal of achieving financial returns that will enable the Foundation to meet its annual philanthropic obligations, with maintaining the purchasing power of the endowment so that future generations will also benefit from the Foundation's charitable giving. In uncertain and volatile markets, these financial goals are not easy to achieve. Therefore, our divestment from fossil fuels, which is now underway, will be accomplished through careful process of evaluating our exposure and a phased approach that proceeds as quickly as is prudent. Since obviously this organization is made up of many of the biggest capitalists in the world, they're not stupid. They know exactly what they're doing. And they're doing it, as they just said, for profits. But oil is one of the most profitable things that there is in the entire world. So what's going on here? Is there something wrong with oil? There might be. The problem for the major oils is twofold. Costs are rising and oil prices aren't, while the complexity of developing the most recent oil and gas discoveries is preventing drillers from reaching production targets. Brent crude prices, the benchmark for more than half the world's oil, slipped 0.3% last year. The first time that prices failed to gain since the global financial crisis of 2008. Prices may slip below $90 a barrel by 2020, future contracts show. The biggest producers haven't kept up with gains in oil prices for the past few years, while Brent crude prices have more than doubled to $105 a barrel since the start of 2009. The top 5 oil and gas companies have gained just 13% since then, compared with an 81% increase in the Dow Jones Industrial Average. Beset by shrinking returns and costly project delays, the world's 6 largest energy oil explorers probably will curb spending on exploration and production, or E&P, this year to $148 billion from $149 billion after 2 consecutive years of 8% increases. Cowen and Company analysts include James Cranwell said in a January 7th report, company executives are hoping to ward off a rising wave of shareholder activism by proactively rewarding investors, they said. It appears as if the super majors are giving greater scrutiny to the major E&P projects relative to return, the Cowen analysts wrote. This is due to the rise in shareholder activism, which could push these companies to distribute more of their large cash flow to shareholders via share repurchases and dividends. Still, there are limits to how much oil companies can cut spending if they want to maintain output over the next few years, said Christine Toscarino, an inquiry analyst at S&P Capital IQ in London. Investors are getting angry and don't want oil companies to invest, Toscarino said. But if they don't invest, they won't be able to pay dividends in the future. Long story short, the cost of investing in oil is going up. The returns are shrinking, which means there is a falling profitability in the oil industry. Now, what the shareholders are seeing is that they're spending more money and not getting as much back. So to them, it tells them, don't invest. But if you don't invest in something as capital intensive as oil, you will lose overall. So there is kind of a struggle between those who are carrying out the operations and those who own the operations themselves. Now, in a situation like this, we would watch for indicators in capital investment. However, we must also recognize that capital investment is a lagging indicator. We must also understand that there are some external factors that are causing it to be so expensive or more difficult to get oil. For example, unending wars in the Middle East. After all, just about 2 or maybe 3 months ago, ISIS captured an oil refinery in Iraq. and that would certainly complicate things. Actually, it was just released yesterday, before this recording was made, that the U.S. had gone in and bombed an oil refinery in Syria that ISIS rebels held. So there is the ongoing military conflicts that are a major part of this lower profitability. We do understand that oil is done, that the wars happen for oil, the oil profits specifically. But there are things that can come up that make this more difficult, and we're kind of in that situation right now, where things have gotten particularly beyond the control of the imperialists and what it is that they want to do. What else do we know? We know the demand for alternative energy is growing rapidly for electricity generation in the U.S., accounting for nearly 40% of new domestic power capacity installed last year. Driven primarily by the growth in wind and solar photovoltaics, alternative energy will likely become the world's second most important source of electricity apart from coal by the next 5 years. Now, the largest player in the game when it comes to green energy is China. And in fact, China has spent a tremendous amount of capital and resources into developing green technology, even to the point where it was about a year or so ago that the United States filed a complaint that China was undercutting them in terms of the production of solar panels, and then there was a whole situation over that. China understands what's going on, and it's not just China. A lot of countries in Asia are starting to switch to green energy. Now, the reason for this being that while coal is relatively abundant in Asia, oil is not. Coal and oil is pretty much dominated by U.S. interests. And again, these countries then have to live under the possibilities of those interests, unless they could get away from it. If they start producing their own green energy, or at least some kind of an Asian bloc that produces their own energy in a green manner, they can avoid all of the oil politics that comes with dealing with fossil fuels. I mean, we see how tightly interwound oil is with U.S. foreign policy. When something happens with regards to oil, everybody has to pay attention and try to get a hand in it, even if they don't want the war to happen. Take what happened with the war in Iraq. Saddam Hussein stopped selling oil in U.S. dollars, making it better for everybody else, worse for the U.S. So the U.S. went and found a pretext to go and invade and take the oil refineries back. Both China and Russia both protested this and tried to get them to not invade because, well, they were getting a better deal this way. But once the invasion happened, Russian and particularly Chinese oil companies wanted to get in as fast as possible to snatch up as much of the oil as there is in Iraq as possible, despite how much they were against the war, because their country is still heavily run on fossil fuels, and particularly China, which economy is only now starting to slow down, but at the time it was seriously taking off. And that meant that their need for energy was also exponentially increasing. So what happens is these countries now have to become a part of that oil politics. They have to get in there for their own interests, or they're going to be in a lot of trouble. The U.S. could end up dominating the entire global oil market, and that wouldn't be good for anybody but the U.S. oil companies. Unless, of course, they started building their own alternative to that. They started building a kind of green energy system to protect their own interests and end up protecting themselves from global oil politics. China's National Energy Administration has called on local governments of all regions to focus on distributed generation, to reform and reinforce feed-in tariffs, provide additional financial incentives, and fast-track connections. During the first half of 2014, China added 3.3 gigawatts of solar capacity as per National Energy Administration's statement. This included 2.3 gigawatts of utility-scale capacity and roughly 1 gigawatt of distributed generation PV. China, the world's largest carbon emitter, has set a goal of 35 gigawatts of installed solar power by the end of 2015. Now, we also know something else that's been harming or possibly limiting the profitability of oil, and that's been a lot of the environmental regulation that's been put in by Obama. Sure, it is aimed at preserving the environment, but environment, oil company, one of these is going to win and the other is going to lose. Essentially what's happening, the little restrictions that are being placed on them where they can explore for oil and how much they're allowed to explore is decreasing the turnover rate on constant capital, meaning it's making it more expensive for them to do it because they can't do it as much as they want to, and they can't do it all of where they want to. So that's making it just a little bit more difficult. President Obama's environmental plan, unveiled in June 2013, putting further limits on existing coal-fired plants, gave a shot in the arm to the U.S. solar sector. The president issued directives asking for environmental regulators to set up carbon pollution standards for active plants. Coal generates about 40% of electricity, and coal plants are the largest source of carbon emissions in the country. So we can definitely tell in this situation profitability, or at least the percentage of the market, is going from oil to green energy. So that's probably what the Rockefeller brothers are really seeing here. They understand that this is coming up in the future. This is going to be the way things are. And they need to get in on the ground floor if they want to make the serious money. Now, this also has a lot to do with global politics as well. Owning an oil company gives you a significant amount of power regardless of what country you're talking about. Oil companies are some of the most powerful entities in the entire world. Now imagine these Asian countries get out from underneath the thumb of big oil, and they say, to hell with you, we don't need you anymore because we have our own power. So what this fund is doing is recognizing that if it wants to continue not just the profits, but the power that comes with owning a particular share of the green energy market, they're going to have to start investing in it. Like I said, these guys are not dumb. These guys are, billion, probably even trillionaires for a reason. They know exactly what they're doing, and what they're doing is entirely intended for profits. They're no fools. And their timing could not be any more ironic. Now, this came out just as there was the big climate summit, like the big protest of 400,000 people that recently took place. So they're switching for their global political strategic interests and profits. And they get to do it because they say they're concerned about the environment. So they end up making a more profitable switch and end up making themselves look like the good guys in the process. I mean, this is a very good corporate propaganda move. I mean, my hat's off to them. They did it at the right time and they worded it the right way. I mean, come on, these companies really don't care about the environment. They care about making money. If they cared more about the environment than making money, it essentially wouldn't be capitalism. So that's what I think is really going on with them suddenly announcing that they're going to drop oil and start switching to something else. Now keep in mind that they don't own anything. They're not in the factory doing this. They own shares, they own interests in the companies that do them. So they can just pull it out and then just invest that money somewhere else. Now, despite a lot of the conspiracy theories that are obviously coming up as a result of this is the bottom line: profitability, no matter what. There is also the global strategic interests that are involved in owning natural resources, particularly energy. Thank you for watching. Please comment and rate the video. If you liked it, hit subscribe or check out some of these other great videos. If you wish, share it on social media. While you're at it, why don't you follow me on Twitter? And if you got time, go on over to the MRN bookstore and check out some of the latest books available.